What is going on, everyone? Welcome back to my YouTube channel. I know it has been a few months, but I think the time has finally come. With the amount of volatility, all the crazy moves, all these macro events playing out and panning out in the markets, I think it's time to finally return behind the camera. It does feel good, I'm not gonna lie. Firstly, I appreciate everyone checking in on me. I am still alive. Trust me, I trade gold. It keeps the heart pumping. But it's finally good to get back behind the camera. On this channel, I'm going to be sharing what I've learned, what you watching this right now can do to stay ahead of what's actually going on and actually be recession proof. That is the most important thing right now. With all the madness going on in the world, your main focus should be to stay ahead of this recession, and I'm going to help you do that. In today's video, I'm going to cover the top 3 things that you should be focusing on right now if you are trading to finish off 2022 to set you up for 2023. So the top 3 trades, let's go. Right, the first one being gold. Obviously, I'm a very big advocate of gold. I've traded it for years. It obviously does come with a warning. If you are trading gold, manage your risk, right? Manage your risk. This is not your friend. It is volatile as fuck. And yeah, it can blow your account. So be careful. Right, looking at gold right now, we understand a possible recession is in the loom, right? It's not if it's going to happen. It's not maybe it's going to happen. It's fucking yeah. We now need to figure out how to take advantage of that, right? So we don't get left behind. Now, looking at gold over here on the weekly time frame, we can see that we've had this nice little double top. I get it, at all-time highs, right? You obviously had the Russian-Ukraine invasion. You got China-Taiwan right now bringing a lot further geopolitical tensions to the markets. But as a recession comes into play, we want to understand what that does for global growth and what that does for markets in general. Now, looking at gold over here again, on the weekly time frame, we're at such a crucial level, also known as a line in the sand, by the way. 1800 for me is a very, very important level, as we have seen it before. I'm a very big advocate of inside bar formations. I'm going to draw one in for a second. An inside bar, for myself, is not necessarily always a singular candle, but a big move in a certain direction, so an impulsive move in a certain direction. Your whole job is to jump on the back of that by simply, I personally love using fibs. So you fib from the high to the low. If we just look into that, that was a beautiful little fib, right? I'm a bit OCD with this. Beautiful little fib on gold. We obviously smashed straight through. And I personally think we are playing out to another fib, another inside bar formation. Probably on the 2-week, you'll see it a bit better over there because we have that massive drop to the downside, right? Massive drop over there. And we stuck within this range. If we understand commodities in general are going to be affected by a recession, are we buying these gold dips? Are we simply selling the rallies? So for myself personally, I am looking to sell the rallies, right? So looking at this on the 4-hourly time frame, you can see gold has been on a fairly little bullish up run into the upside, straight into, let's get rid of some of these levels, right? Straight into my key area of importance of that 1800 handle. We understand the only reason why gold is where it is right now is because of the China-Taiwan situation that is causing further geopolitical tensions along with the Russia-Ukraine situation that we have in front of us right now. So for myself, I am personally going to be waiting for any bearish reversals around this 1800 region. I know we have NFP today. Today is Friday, the 5th of August. We have non-farm payroll, which is the first Friday of every month, which is pretty much just the labor data that comes out at the start of every month. The jobs market right now in America is pretty tight, pretty strong, so I wouldn't really worry too much about that. The next thing you look at is earnings, by the way. Cool. Let's get back into gold. I'm personally be looking for any sort of bearish reversals around this 1800 handle. And look, I expect this to be back at the 1600s, 1500s. It is just a matter of when, right? Now, are you necessarily, or am I personally, going to be holding this till 1800? No, right? I'm not a hodler. I am identifying the highest probability case of where this is more than likely going to be traded in Should I then want to jump on the back of that, that gives me the opportunities for me to use correct risk management to then jump into this position. So gold for myself, if I have to just zoom out, right, I do then expect at least 1650, 1625, which is there again another 9% drop on gold. 1,600 pips. It can happen. It is just a matter of when. So that's the first one that I'm looking out for. Right, second one, GBPJPY. Looking at this on the weekly time frame, it's important to know why we are where we are. Now, GBPJPY has had this massive rally along with all yen crosses simply because the Bank of Japan announced an unlimited amount of QE. Now, that was through bond purchases, and that simply devalued the yen to levels not seen in 30, 40 years, right? So now, as global growth starts to shrink, all yen crosses have pretty much hit a top. So that is something that I'm focusing on. I personally do favor, along with recession fears growing here in the UK, I expect the pound to get hit. And that's something I'm focusing on is GBPJPY. Yesterday we had the Bank of England raising interest rates. And it was quite a dovish event, purely because one of the 9 members decided to vote for a lower hike as global growth is obviously on the forefront, as well as Bank of England governor announcing a very, very deep recession over the next 12 to 18 months. So that's something to factor in. So for myself, what I am doing, I have been riding pound yen for quite some time now to the downside. So I am personally still monitoring this one, right? But I do favor a bit of a push higher before the overall rally lower. Why do I favor this little push to the upside? If I now have to put technicals in the forefront of fundamentals, I can just see that we have broken structure over here, which very briefly holds some preference for me. Regardless of my picture, I need to understand there is some positioning that needs to get fixed. So I do favor a bit of a push higher, right? Possibly back into 164.50 before then looking for some short positions. Overall, I do favor, and there is an area of interest over here for me at this level. Let's get rid of some of this now that we understand what is happening. 164.50, very, very important area of interest for me that I do favor price to come into. So that is something I'm very, very keen on and very interested in on taking as well. And then XRP. This is something I've been involved in since fucking 2017. In and out, just due to these peaks and these troughs in XRP. I understand that the SEC case is looking good. Could it get resolved? No one really knows. Is that going to obviously affect price? If it does, more than likely, we are obviously going to see some flows coming back into XRP, in my personal opinion, especially with what's happening in terms of majority of the central banks right now are talking about CBDCs. If they are focusing on CBDCs, we want to take advantage of that, right? We want to take advantage and jump on the back of that. If XRP provides a payment solution, you got XRP, you got XLM. Those are 2 options that we could obviously look into. Personally, for myself, as you can see, very, very clean chart. I do understand the cryptos, and this is a very controversial topic. Cryptos haven't seen a recession, right? So do I think all 19,000 cryptocurrency projects are going to survive? Probably not, right? So for myself, I'm handpicking 5 or 6 projects for loading up now on this bear market that we have in front of us with the possible recession, which is going to hit equities. We understand right now the correlation between equities and cryptos. We understand they both trade in tandem as risk assets. Over the next 12 months, if we do go into a global recession, which is more than likely, we are going to see cryptocurrencies get hit. For myself, XRP is something that I'm personally buying the dip on. I got another video on buying the dip coming soon, so stay tuned for that one. But XRP, anywhere pretty much from where it is right now, in my personal opinion, down to the lower end of 14 cents. I do favor anywhere in this little box. I will highlight this as a little golden zone, right? If we just have to think about where price has been, how price has reacted before, I'm personally accumulating in this area. I'm then just trying to buy these dips in this area, but also keep some cash should we drop lower. There again, I have, no one's going to like me for saying this, I have a level at 6 cents that I do feel if we have one more capitulation, every bear market, if you haven't been in a crypto bear market, you usually have those capitulation days of 40, 50% across most assets. If we were to see that drop anywhere from where we are right now, right, you're looking at a 50% drop will take us to 15 cents. If we have a global recession and equities along with all risk assets are getting hit, and we have a capitulation across risk assets and cryptos, should there be further bankruptcy filings in the crypto market, they're going to get hit. All these assets are going to get hit. If we have those capitulation days, I have this level at 6 cents, which I'm about to put an order in. Should that come through, it's happy fucking days. But these are the 3 things that I'm personally focusing on right now. And there's so much more coming for this channel. So those are the top 3 things I'm focusing on. Gold, possibly trading lower during the global recession. GBPJPY massively overextended. My first pair I ever traded, by the way, GBPJPY. I'm expecting that to trade a lot lower. So expect another 500-600 pips to the downside very, very imminently. And then XRP, personally looking to buy these dips over the next 12 months. Should this SEC case go away, I personally expect mass adoption for CBDCs to impact XRP's price due to the payment solutions that they provide. But that is it from me, everyone. I hope you enjoyed my first video back. Stay tuned for more. I'm going to try and drop regular videos, even if it's a chart breakdown, even if it's a general catch-up on psychology and so forth. Take care. Please like, comment, share, subscribe, share the video. I do appreciate all the love and support. Drop a comment if you enjoyed this, and stay tuned for the next video. Take care. Bye-bye.